Hello. Uh, Welcome back. Good evening. There was a small technical glitch. Today we'll be dealing with the income from other source, clubbing as well as setting and carry forward. Please let me know if my audio video is fine. We are good to start, or any disturbances from video side or audio side. So today we'll be discussing income from other source, which is appears to be a small chapter, but you will get some numbers from that also. So shall we start, or are we good to start? Okay. So I'm starting, guys. Audio, video, anything is issue, just let me know, because it is difficulty to change afterwards. Yes, someone is saying that with capital gains, and we have done with audio not clear. Huh? Ayyo. Please let me know now, like how is it audible? Is there any breakage of voice? Can someone confirm, like, if it is fine now? Not clear. Is it still not clear? Now fine, right? Yeah. So as you know that we have 5 heads, PGBP and capital gain are the major heads that we have already completed. And now what we'll be going to do is we'll be doing the income from other source, because salary and income from house property, there are not much changes, and we have already done the video 6 months back only. So that video is we have already done salary head as well as income from house property, which are fairly not many changes are there in those chapters, so you can refer those chapters as well. So what is pending now in our entire YouTube channel is income from other source and clubbing and set off and carry forward. So these are the things that I have hardly done any time. So this day, today we will be doing those 3 chapters, and we'll be spending at least 3 to 3.5 hours continuously. So bear with me, and but believe me and trust me that here you will be kind of grabbing 10 to 15 marks, like other source, clubbing and carry forward. And these chapters are not like very tough, and like you need a lot of understanding to get these topics. These are fairly simple only. Most of the times they might be asking a case based question, like is it chargeable, is it not chargeable, is it club, should it be clubbed, should it not be clubbed, like that. And sometimes they might ask a question relating to number also, but we will be doing both. First we will be discussing the concepts. Once we are done with the concepts, we will be doing the illustrations as well. So both will be done simultaneously. And whoever has joined so far, whoever has joined so far, my request is just like the live stream and just share with your friends, like whoever is kind of attending other sessions or another coaching centers, or maybe someone who is doing self study. So it will be beneficial for them also, and they also come live and we have more participation, more interaction. So then you can differentiate why a live session is better than a recorded session. I always feel that recorded session, I mean, like live sessions are much better than that, because there is so much of involvement, so much of questions, answer, cross questioning will be there. So my request is just to give a like and share it with your friends. Yeah, so I'll be starting my session. We are doing income from other source. Just a quick wrap of things. We have 5 heads, right? Like salary, income from house property, and PGBP, and income from other source. Sorry, income from capital gain, and income from other source. Salary में 15 was a charging section and 16 was a deduction section, and income from house property 22 is a charging section and 24 is a deduction section. These sections are very important for examination point of view. Somewhere if you can write in the examination also the section, no, then the chances that you get better marks. Okay, so PGBP, your 28 is your charging section and the deductions are from 30 to 37. Income from capital gain 45, and you have 54 as your deductions, and here it is 56 and you have 57 as a deduction. So here you can pull it one by one. So someone is putting a chart or something and then deleting. I would say not required to delete anything, it's fine. So after the live stream, nobody going to read those live stream comments. Yeah, so what all will be coming under income from other sources? This is a residual head. It is a residual head. So residual head like salary, house property, PGBP, and capital gain, it will fall here. So there are 2 types of incomes that will come into income from other source. One is always it should come under income from other source, like income chargeable only under the income from other source. Second category is only if it is not falling under other heads, it will come. One example I will give you. If there is the employer-employee relationship, so whatever I am giving to my employee, because there is an employer-employee relationship, it will come under salary, right? Assuming that there is no employer-employee relationship. Example, salaries of MLAs, MPs. So they are not working for government. Okay, they are working for people. So they are public functionaries. So there is no employer-employee relationship. That is the reason why their salary will come under income from other source. Same way, you take the example of income from house property. Section 22 talks about only when you are owner of a land or a building or land appertaining thereunto, income from that will be coming under income from house property. That's what we have read there. Assuming that you are not the owner of a building, but still you are receiving rent. So when you are not the owner of a building and you are receiving rent, no, because it is not coming under income from house property, it will come under income from other source. I hope you are understanding. First, we will check in the respective head only. Is there any employer-employee relationship? If there is no employer-employee relationship, it will come under income from other source. Same way, house property के लिए भी, are you the owner of the building or land appertaining there too? If you are owner of that, it will come under income from house property only, or otherwise it will come here. So every time it is the same way. So there are 2 types of income that will come under income from other source. One is specifically coming here, that will be dividend income. So whenever you are receiving dividend from any company, it will be chargeable under income from other source only. It is not as simple as I just said. There are 3 types of dividends. When I say dividend, there are 3 types of dividends. One is your final dividend that you will declare in your AGM once the books of accounts and everything is been closed. Another is interim dividend. During 2 financial years, so you declare the dividend thinking that you are getting good profits and you want to encourage investors to stay with you, or maybe encourage more investors to come into picture. So you will declare in between the year. And third one is your deemed dividend. Third one will be Deemed dividend. So we will talk about the income tax angle. Final dividend you will take into your books of accounts once it is declared in the AGM. No issue, and examiner will not ask any question on that. Interim dividend is only when it is certain that you will be getting the dividend from that company, you will be recognizing it, otherwise you will not be recognizing it. In both the cases it will coming to income from other source only, and here also it will come income from other source only. Coming to deemed dividend, there is one section, I mean this is all your section 8, whatever I am discussing is section 8, and you have something called deemed dividend, section 222A, B, C, D, E. Okay, so these 5 sections I will be discussing very deeply today. Maybe I will be spending 10-15 minutes on that. Trust me, it will be worth, you will be really understanding how companies try to escape tax, dividend tax on the income by giving the shareholders in another way. So this A, B, C, D, E, I would say this is the most important for you for income from other source chapter. Whenever company is kind of giving loans or anything of that sort to the shareholder who is having substantial interest in the company. See, simply as it's like that, I am a company, I am earning lot of profits. If I declare the dividend, no, it unnecessarily you will be paying tax. So what I can do, instead of declaring as a dividend, I can give you as a loan, because you are having substantial interest, you are having more than 20% stake in my company, and the company is not a company in which the public are interested, like it is a closely held company, nobody knows what is happening in the company. So what I can do, instead of declaring as a dividend, once I declare it as a dividend, you will be paying tax, right? So to avoid that, I can say that okay, I am giving you 1 crore as a loan, and you will never pay and I will never receive. I'll just show it as a what you call it, accounts receivable. You will individually you will not write anything like that. So government is losing interest on that, or tax on that. So this section is important of all the sections. I'll be reading one by one, but these 5 sections you need to keep in mind. First one is distribution of accumulated profits entitling the release of the company's assets. What do you mean by that? Take one random example. This is our balance sheet. We have a capital of 10 lakh. We have reserves and supplies of 2 lakh and other liabilities of 8 lakh. So this is 20 lakh, right? And we have here all assets, maybe cash, maybe fixed assets, maybe plant and machinery, everything, intangible and everything, 20 lakh. So genuinely what I should be doing is, I should be declaring dividend out of this profit, 2 lakhs. But instead of that, what I am doing is, I am giving you one asset to you. Maybe we are having a building in Hyderabad main city, okay, that building I am giving it to you. So it is just like, instead of declaring it from reserves and supplies, I am giving you an asset, right? So whenever company releases an asset to the shareholder, to the extent to which the profits are available in the company, to the extent bola to reserves and supplies is 2 lakh, right? To the extent of 2 lakh, it will be deemed dividend in your hands. Okay, so next, distribution of debentures, deposit certificates to shareholders and bonus sheets to preference shareholders. What I mean by that, see now because of this 222A, I am not allowed to give you any asset, right? So what companies are doing is, instead of giving it as an asset, they are saying, okay, I will be giving you debenture, or I am giving you bonus shares. Bonus shares not to the equity shareholders, bonus shares to the preference shareholders. Why are you giving bonus shares to the preference shareholders? Generally bonus shares should be given to the equity shareholders. So whenever you are doing like deposit certificates or debentures or shareholder or bonus shares to preference shareholders, again it will be a deemed dividend. So understand the word itself, it is deemed, it is not a dividend only, but because I am trying to escape tax on the reserves and supplies that I am having in my company's balance sheet, I am giving in another way. A is asset distribution, B is what you call this, debentures and deposit certificates and bonus to the preference shareholders. Whenever in the question you see that you being a preference shareholder receiving some amount from the, you are receiving bonus shares from that company, which means that to the extent to which the company is having accumulated profits, that will be taxable in your hands as a deemed dividend. So next, distribution on liquidation. So this we have done in our capital gain chapter also. So distribution of distribution on liquidation bole to, now the same example we'll take. This is our balance sheet, right? So if I have to genuinely distribute dividend, what I can do is, I have to declare it from this 2 lakh rupees. But now I am closing the company because the company is not going to run, or maybe we are stopping some business. So now I will distribute all my assets to shareholders. Okay, so what the section is saying is, had you continued the business, you would have been paying tax on these two, you would have declared dividend from these 2 lakhs and you would have deducted, I mean it would have been taxable to the shareholders as a dividend. But now because of liquidation, you are distributing amount to them, right? So to the extent to which the reserves and supplies are there in your balance sheet on the date of liquidation, that will be deemed as a dividend. 222C. Section, if you cannot remember, it's fine, but at least remember the point that when you call something as a deemed dividend, one is asset distribution by the company, B is debentures, bond, this certificates, what you call this, deposit certificates and bonus shares to preference shareholders. So deemed dividend is on the date of liquidation, they are distributing something to you, so that will also be a deemed dividend. So next 222D, D is the capital reduction, D you understand that way. So 222D is a capital reduction. So what do you mean by that? Same company will take it, capital is 10 lakh, right? So there are 1 lakh shares and the face value is 10 rupees. That's how this 10 lakhs is coming. So what I would do is, instead of giving you asset, instead of giving you bonus shares, or instead of giving you deposit certificates, instead of closing the company for liquidation, what I can smartly do is, I will buy back my shares like a part of the capital reduction. You might have studied in your CA foundation. Yeah, I will explain, no issues. You might have studied this in your CA foundation or CPT somewhere. We can buy back a portion of our own capital. So now what I am doing is, instead of 10 rupees fully paid up, I will make it 5 rupees fully paid up. Earlier also there were 1 lakh shareholders, now also there will be 1 lakh shareholders only. There is no dilution of equity, there is no increase of equity. It's only that the face value is I am reducing, which means that that is a capital reduction. So whenever there is a capital reduction, which means that instead of giving you as a dividend, I am reducing the money and giving it to you. So that will also be deemed dividend. So that it is section 222D. And coming to the last one, which is very important, advance or loan by a closely held company to its shareholders. So whenever the company which is like closely held company, you understand closely held company ka matlab only family business, only friends and like only few people are coming together, okay. So that you call it as a closely held company. Widely held company bolte Reliance, widely held, lot of people are having shares in that company from across the globe. So that is like widely held. Closely bolte only few people are holding or controlling the company. So if it is a closely held company and company is giving any advance or loans to a shareholder who is having 10% or more equity, that loan is also treated as a deemed dividend. So you understand the extent to which the income tax is going. I will tell you once again. There is a shareholder, I am not writing properly, A or Mr. X will take. He is having 10%, 20% stake in our company. So the company, what they are doing is they are giving a loan to Mr. X. See, as a company, why are you giving loan to your shareholder? Generally, loans should be given by banks or financial institutions or something like that. You are not there to give any loan to your shareholder, right? And that too is having substantial stake in your company. So if you are giving any loan to a shareholder who is having substantial share, no, that will be treated as a dividend, deemed dividend. So that will be deemed dividend. And there are certain questions that you might get in the examination. By the end of the period, you will try to repay it. By the end of the year, you will be try to repay it. Example, 1st April 2022, Venkateshwarlu, I will tell once again, let me complete this entire 222A to E and then I will explain in Telugu also. So on 1st April 2022, a company has granted a loan to a person 1 lakh rupees. Okay, what is today? Today is 26th March, right? Our books will close on 31st March 2023. Now it is 26th March 2023. So this person is repaying that 1 lakh rupees to the company. Before the financial year close, he is repaying the loan. So now can you say this is a deemed dividend or not will be the question. In examination they might ask question like this. So our answer will be, even though it is repaid before the close of the year, it is still a deemed dividend. I am repeating, you are taken a loan from a company in which you are having a substantial interest. You might repay in next 5 days or 10 days, doesn't matter. Once you take it, that is a deemed dividend. Okay, so any questions with respect to section 222A and 222E, just ask me. And one more thing, whenever you are giving a loan to your shareholder, no, if it is in the normal course of business, there is not a deemed dividend. Normal course of business bole to sometimes you want to take a building on a lease basis. So what you do is you will give some advance to that person, or maybe you want to purchase some plant and machinery, so you are giving advance to one person, and that person happens to be a substantial equity shareholder, but still it is in the normal course of business. So whenever you are entering into a transaction in the normal course of business, assuming that you are a banking company, so banking company bole to obviously they will be giving loans to everyone, as in the same way they are giving loans to their related parties also. And this related party transaction only causes lot of issues in reality. You might have seen ICICI Chandakochar case or S Bank case or Satyam scam. Everywhere there is a related party transaction involved. Okay, so but as per income tax, if you are giving any loan or advances to a substantial shareholder and that too at the market rate, whatever the market rate, that is a different issue. We will check that in other sections like section 48 too. But for here, it is not a deemed dividend. Okay, so please let me know if you have any questions with respect to section 222A, say B, C, D, E, and trust me, it is worth spending time on this. You might get examination question. So coming back to other students who would like to have a Telugu explanation, see మనకు డివిడెండ్ 3 టైప్స్ ఉంటాయి. ఒకటి నార్మల్ డివిడెండ్, ఫైనల్ డివిడెండ్ అంటాం, అది మనం ఏజిఎంలో డిక్లేర్ చేస్తాం. సో ఏజిఎంలో డిక్లేర్ చేస్తాం కాబట్టి నో ఇష్యూస్. వెన్ ఎవర్ దే డిక్లేర్ యూ టేక్ ఇట్ ఇన్ యువర్ P&L, ఐ మీన్ యూ రికగ్నైజ్ యాజ్ ఎ ఇన్కమ్ ఫ్రమ్ అదర్ సోర్స్. అలా కాకుండా ఇంటరిమ్ డివిడెండ్ అని అంటాం. సో ఇంటరిమ్ డివిడెండ్ అంటే 2 ఫైనాన్షియల్ ఇయర్స్ మధ్యలో వాడు డివిడెండ్ డిక్లేర్ చేస్తాడు, హోపింగ్ దట్ ద కంపెనీ ఇస్ డూయింగ్ వెల్. సో అప్పుడు అది ఎప్పుడైతే వెన్ ఎవర్ ఇట్ ఈస్ సబ్స్టాన్షియల్లీ clear that you will be getting the money, అంటే నీకు డబ్బులు బాగా వచ్చేస్తాయి అనుకున్నప్పుడు యూ కెన్ రికగ్నైజ్, ఆర్ యూ వెయిట్ అండ్ రికగ్నైజ్, దట్ ఈస్ అప్ టు యూ. Okay, so you can wait and recognize it. And the third one is deemed dividend. So listen everyone, this is a main point. I will be repeating once in Telugu, once in English for everyone's understanding. Yeah, once in Telugu, once in English. First let me complete in Telugu. So deemed dividend అంటే అర్థం ఏంటంటే కంపెనీ డివిడెండ్ డిక్లేర్ చేయట్లేదు, కానీ డివిడెండ్ డిక్లేర్ చేయకుండా నాటకాలు ఆడుతుంది. అంటే ఏదో ఒక రకంగా ట్యాక్స్ని సేవ్ చేసి ఒక ప్రయత్నం చేస్తుంది. ఎన్ని ప్రయత్నాలు చేసినా ఇన్కమ్ ట్యాక్స్ ఒకటి తర్వాత ఒకటి ప్రొవిజన్ వస్తా పోయినాయి. అంటే మనం లాస్ట్ 75 ఏళ్ళ నుంచి చూస్తే, ఆర్ 1961 అంటే 60 ఇయర్స్ నుంచి ఎన్నో మార్పులు వస్తూ ఉన్నాయి కదా. సమ్ పాయింట్ ఆఫ్ టైం వాళ్ళు ఈ సెక్షన్స్ని ఇంట్రడ్యూస్ చేశారు. ఫస్ట్ సెక్షన్ ఏంటంటే 222A. అంటే ఇప్పుడు నేనే కంపెనీ అనుకుందాం, అంటే నేను సంపత్ని కాదు, ఇప్పుడు నేను ఒక కంపెనీ, ఐఎమ్ ఏ బ్యాలెన్స్ షీట్. నా బ్యాలెన్స్ షీట్లో రిజర్వ్స్ అండ్ సర్ప్లస్ 2 lakhs ఉంది. ఓకే, సో రిజర్వ్స్ అండ్ సర్ప్లస్ 2 lakhs ఉంది. సో వాట్ ఐఎమ్ డూయింగ్ ఈజ్, నేను డైరెక్ట్గా మీకు డివిడెండ్ ఇవ్వకుండా ఇక్కడ బ్యాలెన్స్ షీట్లో నాకు ఇంకా అసెట్స్ కూడా ఉంటాయి కదా. అసెట్స్ అంటే ల్యాండ్ ఉండొచ్చు, బిల్డింగ్ ఉండొచ్చు, ఫర్నిచర్ ఉండొచ్చు, పేటెంట్ ఉండొచ్చు, కాపీరైట్ ఉండొచ్చు, ఏదైనా ఉండొచ్చు కదా. సో నేను మీకు డివిడెంట్ అని పేరు చెప్పి డిక్లేర్ చేయకుండా అసెట్ని డిస్ట్రిబ్యూట్ చేస్తున్నాను. అసెట్ని ఎందుకు పంచుకుంటున్నాను? ఫస్ట్ ఆఫ్ ఆల్ అదేదో దొంగ బుద్ధి ఉందని అర్థమైపోతుంది అక్కడ. సో వెన్ ద కంపెనీ ఈస్ డిస్ట్రిబ్యూటింగ్ అసెట్స్ టు ద షేర్ హోల్డర్, ఇట్ మీన్స్ దట్ దే ఆర్ ఇండైరెక్ట్లీ ట్రయింగ్ టు ఎస్కేప్ ట్యాక్స్ ఆన్ దేర్ రిజర్వ్స్ అండ్ సర్ప్లస్. అంటే వాళ్ళ బ్యాలెన్స్ షీట్లో ఎంతైతే రిజర్వ్స్ అండ్ సర్ప్లస్ ఉందో టు దట్ ఎక్స్టెంట్ ఇట్ విల్ బి డీమ్డ్ డివిడెంట్. సో అది 222A. గుర్తుపెట్టుకోవడానికి కూడా ఈజీగా, ఏ అంటే అసెట్ డిస్ట్రిబ్యూషన్. నెక్స్ట్ 222B. 222B అంటే ఏంటంటే ఈ డిపాజిట్ సర్టిఫికేట్స్ ఆర్ డిబెంచర్స్ ఆర్ బోనస్ టు ప్రిఫరెన్స్ షేర్ హోల్డర్స్. బోనస్ షేర్స్ ఎవరికి ఇవ్వాలి? బోనస్ షేర్స్ ఈక్విటీ షేర్ హోల్డర్స్కి ఇవ్వాలి. నువ్వు ఈక్విటీ షేర్ హోల్డర్సే కాకుండా ప్రిఫరెన్స్ షేర్ హోల్డర్స్కి ఇచ్చావు అంటే ఏదో నువ్వు ఎస్కేప్ చేయడానికి ట్రై చేస్తున్నాను అర్థం. ఒకటి. ఇంకొకటి డిబెంచర్స్, డిపాజిట్స్, ఈ సర్టిఫికేట్స్ అవన్నీ ఇవ్వాల్సిన అవసరం లేదు, ఎస్పెషల్లీ వెన్ యూ హ్యావ్ రిజర్వ్స్ అండ్ సర్ప్లస్. నువ్వు అలా ఇచ్చావు అంటే దట్ విల్ ఆల్సో బి ట్రీటెడ్ యాజ్ ఓకే. సో ఏదైనా అట్లాంటి సర్టిఫికేట్స్ ఇష్యూ చేస్తామంటే దట్ ఈస్ ఆల్సో యూఆర్ ట్రయింగ్ టు ఎస్కేప్ ద ట్యాక్స్. నెక్స్ట్ 222C. 222C అంటే కంపెనీ ఇన్ లిక్విడేషన్. సి తోటే మీకు గుర్తుపెట్టుకోవచ్చు. ఇప్పుడు ఒక కంపెనీ ఉంది, కంపెనీలో బాగా ప్రాఫిట్స్ కూడా ఉన్నాయి, రిజర్వ్స్ అండ్ సర్ప్లస్ నిండుగా ఉన్నాయి, దండిగా ఉన్నాయి. సో వాళ్ళు డివిడెండ్ డిక్లేర్ చేయొచ్చు, కానీ డిక్లేర్ చేయకుండా ఆ కంపెనీని అలాగే చంపేస్తున్నారు. అంటే నువ్వు సపోజ్ ఆ బిజినెస్ని కంటిన్యూ చేసి ఉంటే దానిపైన కూడా దాన్ని నేను డివిడెండ్గా డిక్లేర్ చేసేవాడు అంటే షేర్ హోల్డర్ దానిపైన ట్యాక్స్ కట్టేవాడు. కాబట్టి ఎప్పుడైనా ఒక కంపెనీ లిక్విడేషన్లో వెళ్తున్నప్పుడు వాళ్ళ బ్యాలెన్స్ షీట్లో ఎంతైతే రిజర్వ్స్ అండ్ సప్లీస్ ఉంటుందో అది మొత్తాన్ని డీమ్డ్ డివిడెంట్ అండర్ సెక్షన్ 222(c)గా ట్రీట్ చేస్తారు వాళ్ళు. సో నెక్స్ట్ 222(d). ఇక్కడ కొంచెం ఇది అంత ఇంపార్టెంట్ కాదులే, కానీ డి అంటే క్యాపిటల్ రిడక్షన్. సో క్యాపిటల్ రిడక్షన్ అంటే మీనింగ్ ఏంటి? అంటే ఇప్పుడు మీ ఫేస్ వాల్యూ 10 రూపీస్ ఉంది. నేనేం చేస్తున్నాను, ఫేస్ వాల్యూ 10 రూపీస్, ఒక 1 lakh మెంబర్స్ ఉన్నారు. నేను దాన్ని 10 రూపీస్ని కాస్త 5 రూపీస్ చేస్తున్నాను. అంటే 10 రూపీస్ ఫుల్లీ పేడప్ ఉండే కదా, నేను దాన్ని 5 రూపీస్ని ఫుల్లీ పేడప్ చేస్తాను. అంటే ఆ రిమైనింగ్ 5 రూపీస్ని మీ డబ్బులు మీకు ఇచ్చేస్తాను. ఏదైతే ఏముంది, మీకు ముందు ఎంత స్టేక్ ఉందో ఇప్పుడు కూడా అంతే స్టేక్ ఉంది. అండ్ యు ఆర్ గెటింగ్ దట్ బెనిఫిట్ ఆఫ్ క్యాష్ కదా. కాబట్టి దిస్ ఈజ్ ఆల్సో ఏ వే యు ఆర్ ఎస్కేపింగ్ ద ట్యాక్స్ అని చెప్పేసి ఇది కూడా మీకు ట్యాక్స్ పడుతుంది. దిస్ ఈజ్ ఆల్సో డీమ్డ్ డివిడెండ్. అండ్ నెక్స్ట్ లాస్ట్కి వచ్చేసరికి 222(e). సో 222(e) అంటే అర్థమైందంటే దిస్ ఈజ్ వేర్ ఎవ్రీబడి ప్లీజ్ పే అటెన్షన్. ఎవ్రీవన్ ప్లీజ్ పే అటెన్షన్. 222(e) ఏంటంటే కంపెనీ దగ్గర రిజర్వ్స్ బాగా ఉన్నాయి. సో రిజర్వ్స్ బాగా ఉంటే వాడు డివిడెండ్ డిక్లేర్ చేయకుండా లోన్స్ ఇచ్చుకుంటున్నాడు. ఇప్పుడు నేను ఒక కంపెనీ అనుకుందాం, నేను కంపెనీలో ఒక బోర్డ్ ఆఫ్ డైరెక్టర్ అనుకుందాం. మీరు అందరు షేర్ హోల్డర్. మీరు ఏమంటున్నారు, సంపద నాకు డబ్బులు కావాలంటున్నారు, అంటే మీకు ప్రాఫిట్ కావాలంటున్నారు. నేను జెన్యూన్గా మీకు డివిడెండ్ డిక్లేర్ చేస్తే ట్యాక్స్ పడుతుంది. సో ట్యాక్స్ ఎస్కేప్ చేయడానికి నేను ఏమంటున్నాను, నీకు ఎంత కావాలి, 1,00,000 కావాలి కదా, నేను 1,00,000 లోన్ ఇస్తాను. నీకు ఎంత కావాలి, 1,00,00,000 కావాలి కదా, 1,00,00,000 లోన్ ఇస్తాను అని చెప్పి. అంటే కంపెనీ ఈజ్ డిక్లేరింగ్ డివిడెండ్ not like in a legal way or a structural way. They are giving a loan to the shareholder. Generally you are not supposed to give any loan. Why are you giving loan? So this is just to escape tax on your reserves and surplus. So this is a section 222(e). ఇందులో 2-3 exceptions ఉంటాయి. In the normal course of business life, if you are undertaking any activity, it is not a deemed dividend. And banking channels వాళ్ళకి ఇది applicable కాదు, it doesn't apply to them. అండ్ థర్డ్ వన్ ఏంటంటే, ఒక్కసారి నువ్వు లోన్ తీసుకున్నాక రీపే చేసినా కానీ స్టిల్ ఇట్ ఈస్ ఎ డీమ్డ్ డివిడెంట్ ఉంది. అంటే మీరు ఒక 1 week బ్యాక్ మీరు లోన్ తీసుకున్నారు, ఇప్పుడు 6th March ఇవాళ మీరు రీపే చేశారు, బట్ స్టిల్ ఇట్ ఈస్ అ డీమ్డ్ డివిడెంట్. సార్ మీరు 31st వరకు రీపే చేస్తాం కదంటే, ఒక్కసారి తీసుకున్నారంటే అది డీమ్డ్ డివిడెంట్ అయిపోతుంది. సో దిస్ ఈస్ ద ఎక్స్ప్లెనేషన్ ఐ గేవ్. అండ్ వన్ మోర్ థింగ్ ఐ జస్ట్ రిపీట్ వన్స్ ఫర్ ఆల్, అండ్ సమ్వన్ వాజ్ ఆస్కింగ్ ఫర్ సమ్మరైజ్డ్ వే. 222(a) is companies distributing assets to the shareholders. So it is a deemed dividend for them. B is companies giving debentures and bonus shares to preference shareholders. This is also deemed dividend in the hands of the shareholders. And next C is company in liquidation, which means that a company is liquidating, and on the date of liquidation they are having some reserves and surplus in their balance sheet. To the extent to which there are reserves and surplus appearing on the balance sheet, whether capitalized or not, that is the wording in the section you can see. To that extent it will be deemed dividend for you. And D is capital reduction. Face value is 10 rupees. Now what I am doing is, instead of taking it as a 10 rupees, I am converting it as a 5 rupees fully paid up. So your share was fully paid up earlier also, now also it is fully paid up. Fine. And one more thing, earlier also you are holding certain share, now also you are holding certain shares. So your shareholding is not diluted, but you are getting some cash, right? So that is also a way of escaping tax from the point of view of the income tax. So that is the reason why capital reduction also deemed dividend for you. And one more thing, these sections will apply only if the company is having reserves and surplus. Assuming that there is no reserves and surplus, it is nothing, no need to apply this section only. And the last one is E. Company is giving loans and advances to the shareholder. And the loans and advances, once it is given, it is a deemed dividend irrespective of when it is repaid. Okay. Only there are 2 exceptions. One exception is that if it is happening in the normal course of the business, that is fine. Okay. In the day-to-day business, if you are giving like that, it's fine. For banking companies also, it is fine. So now tell me if anybody is having any question with respect to this so far. I said that it is worth spending time on this section, and I spend as much time as I could. And now let me know if you have any questions with respect to dividend. So someone was asking, Akash, why are you not putting, boss, from last 3 days I am coming live. Okay. So I am only shouting here, but everybody puts in a comment section saying that they want sessions. But once I come, nobody is coming. Okay. You check the channel, every day I am coming live. And today is Sunday, and today also I came. Okay, so it is clear for 2 people. Yes, concepts also we will discuss. Concepts with the illustrations also we'll do. Only illustrations is not a good idea to go ahead. That's what I believe in. Yes, there should be a mix of both concepts as well as illustrations. And if you observe our session, every day I'm taking some illustrations also. Even then people are complaining that the session is going too long, but still I'm insisting on solving the problems because I know that I understand the importance of solving the questions also. Yeah. So next there are 3 case studies, and don't forget in examination they might ask a case study also. Even if you don't remember the case study also, I told this multiple times to a lot of our students. You first write the facts of the case, like just write facts of the case, then whatever the question is given that you rewrite one more time, but in a generalized normal language, in a simple language. Then what is the point of dispute? Just write point of dispute, underline, and then write 1 or 2 sentences on that. One sentence is sufficient. And then provision of the law, section 222E, that you write it. Even if you don't remember the case study also, it's fine. Then you write the conclusion. That way you will get really good number. Okay. Yeah. Advances were made by a company to a sister concern and adjusted against the dues for job work done by the sister concern. So is it a deemed dividend or not? They are asking. Sister concern bole to, that like in a group of companies there are other companies. So assuming that I am into manufacturing something, I'm manufacturing of a car, but job work I don't do it. It is done by someone else who is also a part of my old group. So that is my sister concern. So I'm paying some advance to them, not for as a loan, like that's what they said. It's not as a loan, but it is purely to get some work done by them. If I'm the car manufacturer, the car painting and everything, or whatever you call it, that job work is done by them only. For that purpose only I'm paying them 10 crores. Though it is resulting of reserves and surplus, even though I'm having reserves and surplus in my balance sheet, but still it is not a deemed dividend. The only reason is I am doing it in a normal course of business. So if you can remember, write this case study, otherwise it's fine, but understand the crux of it. Okay. Hello Sai Kiran. And next, and again, plant and machinery. Someone wants to install a plant and machinery in that company, and for that they are giving some loans and advances to a person, and the person happens to be a interested party, but still it is not a deemed dividend because it is in the normal course of business. So it's fine. This I have explained. So as someone said that we want some illustrations, bolke. So I'll be solving few illustrations also. And one thing I want to make it very clear. Concept I will explain as many times as I want, but the numerical problem solving should come from your end. Okay, I'll read it and I'll wait for some time. And I'll see how many of you can answer it. MNO Private Limited, a company in which the public are not substantially interested. So section 222E also applies to a company in which the public are not substantially interested. And so this is the case. Assuming that it is not a public, assuming it is a company in which public are substantially interested, then no question of 222U. Just say that it does not apply to that. K is a shareholder of the company holding 15% of the equity shares. Okay, I said 20%, right? It's 10%, sorry. The accumulated profits of the company on this date was 10 lakh. The company lent 1 lakh to K by an account to pay check on this date. The loan was not connected with the business of the company. K repaid the loan to the company by an account to pay bank draft on this date. Examine the effect of the borrower and repayable of the loan by K on computation of his total income for the assessment year 2013 to 14. So I'll just wait for a minute, not even minute, 30 seconds are sufficient. Now just to tell me, is 222E applies or doesn't apply, that's it. And later the sentence formation and writing the provision, facts of the case is all your skill. I mean, you can apply in the examination. But the ultimate answer is does 222E applies or doesn't apply? Just I want that answer. I'll wait for 30 seconds or max 1 minute. Very quickly guys, by 8:30 we should complete this. Applies, one answer. So it is still applies, even though you repay it by bank account, paycheck or anything. That see they will try to make you realize or think that because it is paid by account paycheck, then it is not a deemed dividend, irrespective of the mode that you are paying and the time at which you are paying, it is still a deemed dividend. So it is applies. So that is all about your deemed dividend, and we'll go to the next one. Next is your casual income. So casual income, people whoever attended our sessions, TDS chapter may we have done this extensively. 115BB, 115B, baga double we said it, right? So if you are having that card games of any sort, or horse races, 194BB. So here it will be taxable at the rate of 30% if it exceeds 10,000. So whenever you are playing a game and you are getting that, that should be taxable under income from other source only. That's it. And this is again important thing. You might expect a question on this. I will tell you the provision also. I will ask you to solve the questions whatever I have given here. But first I'll explain the provision. Consideration received in excess of fair market value of shares issued by a closely held company to be treated as income of such company where shares are issued at a premium. So what does it mean? I will tell you one case study. I think in one of the previous earlier live streams I said this, but again I will tell you. This is a political issue in one of the political parties related. What they have done is they floated one company. Okay, without taking the names and all those things. What they have done is face value is 10 rupees. They have started the company with a face value of 10 rupees, and numbers are not accurate, but my own numbers, and the fair market value is roughly 10 to 15 rupees. That's it, not more than that, because it's a fresh company, right? See, if I start a company today, how much value will be? If I say face value 10, you will not even ready to pay 10 rupees only. So don't think the fair market value will be more than that, assuming 10 to 15 only. But they issued these shares at 900 rupees. Can you see what is happening here? So just they floated a company and they issued a share at 900 rupees whose face value is 10 rupees only from the public. So it's public or not really public. They are all related parties. They are all friends and circles which they are trying to convert their black money into white money. Okay. So that's where this section has been started. The section says that if a company is issuing shares at a premium and the premium is more than the fair market value, then the difference of that should be your income from other source. I'll repeat. When the company is deliberately issuing shares at a price which is more than the face value, which is more than the fair market value, then the difference will be treated as income from other source. So you might ask a very basic question, sir, does it mean that we should never issue shares at a premium? You can issue shares at a premium, nobody is stopping you, but the premium, see, when you can say that my company is having premium, that should be equivalent to fair market value, right? Fair market value is 15 rupees, but you are issuing it at 900. So it's clearly evidence that the difference of these two is you are trying to escape tax on this. So this should be taxable to the company as an income from other source. So this was a provision, I think 4 or 5 years back they brought into the picture. Number exactly which year we don't know, but that is a welcome mode by the company. And this applies only to a company which is closely held company. So it's not like any public companies, only companies which are held by only family members, friends, no. There you are trying to kind of divert money from one source to another source of that sort. So that is the reason why this section is brought into picture. So there are few examples I will tell you. This guy you see is issuing 10,000. It is not discount of Venkateshwarlu. Discount ki ivatledu ikkada. Face value 10 rupees, market price 15 rupees. So నువ్వు ఇష్యూ చేసిన 15K ఇవ్వాలి కదా. సో ఇప్పుడు మీరు ఒక కంపెనీ ఇప్పుడు నా దగ్గరకు వచ్చారు అనుకుందాం. యు ఆర్ కమింగ్ టు మీ ఫర్ క్లాసెస్ ఎగ్జాంపుల్. సో మై ఫేర్ మార్కెట్ వాల్యూ ఆఫ్ ద క్లాసెస్ ఇస్ 5,000 rupees. Okay, 5,000 rupees per subject. Okay, so how much you will pay? 5,000 only, right? Do you want to pay 50,000 rupees for my classes? You will not pay unless you are related to me and you are trying to convert your black money into my white money. Example, don't apply it word to word. Why are you paying more than what is my market value? For any product that you go, Coca-Cola, 100 rupees is there. Market value is 100. You will pay 100 on it. Why are you paying 1000? So it's not discount. Companies issuing their shares at a value which is much higher than the fair market value. Fair market value is 5000 for my classes and you are paying 50,000. So there is definitely something is fishy here, right? So you are trying to escape tax, or maybe you are having whatever the cash that you are having is not a genuine cash. Okay, yeah. So these kind of a questions you can expect in the examination, guys. This illustration is very good illustration. So I will, for time being, we will close it. Look at this company, they are issuing 10,000 shares. Fair value of the share is, face value of the share is 100 rupees. Fair market value is 120. Okay, and you are issuing it at 130. Why are you issuing it at 130? The difference is there, no? The difference you have to pay tax now as an income from other source. So 10,000 multiplied by 10 rupees. So 1 lakh. 1 lakh will be taxable to the company under the head income from other source, section 56 subsection 2 clause 7b. Any question till this part? I will take other questions also. Just let me know very quickly, because we cannot wait more time. Today's our agenda is to complete 3 chapters, right? So we are very rigid in doing that. I will be completing it, be it 12 o'clock also. Okay, I want to complete all these 3 chapters. I don't want to again start these chapters. Just let me know if you have any questions with respect to this. You can expect question on this. The issue price should be more than the face value. It should be more than the fair value, fair market value. Then only this provision applies. Now you take this example. He is issuing 20,000 shares. Face is 100. Fair market value is 120. And you are issuing lesser than that only. It's fine. So this section does not apply. That's what they say. This section does not apply. So you just observe the difference between these 2 provisions now. Just observe the difference between these 2 provisions, these 2 examples. One, they are issuing at a price which is more than the face value, which is more than the fair value. Then the section applies. In the second case, they are issuing it more than the fair value, more than the face value, but lesser than the fair value. So it does not apply. 56 to that 7b, I think, it does not apply. Any question with respect to these 2 questions, these 2 examples? Anyone, whoever is watching? We can go and solve other questions, guys. As you are saying that you want me to solve more number of questions, right? Anyone? No one? Okay, I am moving it. We are hardly having any time. But this provision does not apply to few cases. These are like exceptions. Even though you issue it at more than the face value, more than the fair market value, this section will not apply. In examination, you can expect, at least for final students or maybe at inter level also, sometimes they ask it. Every time don't expect all UGB questions, okay? Sometimes they ask a difficult question and we say that the paper is tough. So it's just that our preparation is not that standard. Now we'll try to make, I try to improve our standard of preparation. So venture capital fund ke liye this is not applicable. I mean, this provision is not applicable. And by a company from class or classes of persons as notified by the central government. So central government will notify certain class of companies. For them, this will not be applicable. So I'm not reading all them, but once it is declared by the central government as to which company, for which company it is not applicable, it is not applicable. See, that's what this is a closely held company. This is a family business. Okay, so you are receiving more money than what you deserve. So why the other person is paying more money in your company? Unless you are a venture capital undertaking. So just like startups, you see, Shark Tank and all. So they pay more than their fair values. That's fine because they are venture capitalists. Venture capital, matlab like they are putting their money into startups because they get some license and they get permission. So their money is not black, it's white. But for a politician, they are get the money from different sources as a black money. So what they do is that they invest in some company shares saying fair value is face value 10 rupees, 1 lakh shares, 10 lakhs only. They put 1 crore rupees into it. Okay, they are not venture capital undertakings, right? So that is the reason why if you are taking more money than what you deserve, that is your revenue. So see, income tax cannot ask these politicians or black money people, right? But they can catch hold of the companies only. So that is the reason why instead of asking that person, why are you investing? They are telling this person, why you are taking more money than what you deserve? Give me the justification for that. Okay. So there are few companies which government has notified so far. As I said that these are like for promotion of internal trade and industry. They come up with a few companies, so that those companies I'm not reading it as of now. It's not important, but just understand the context of it. There are certain exemptions for certain companies. That's it. In examination, if they give also, they will give. No, you're not getting. You're not getting Jagapati. The reason why they are asking the company to pay is that investing more big it, so the difference you only pay tax. Okay, so that's it. I mean, we will not go detail into it, but examination point of view, that's sufficient. Being it's a revision session. Interest received on compensation or enhanced compensation deemed to be income in the year in which receipt and taxable under the head income from other source. This we said it multiple times when we are doing income from capital gain, that whenever government compulsorily acquires your land, that is your transfer. So you will be paying tax. I mean, that is a transfer and you are liable to capital gain tax, but not in the year in which the transfer is taking place, but the year in which they make the payment, right? You know that. So that is one portion. But now when the government or any court gives any verdict saying that you need to pay additional compensation, government sometimes makes a delay also. So if you receive the interest from the government for compensation or enhanced compensation, again that is also taxable in the year in which it is received. So there the original amount is, again that is your sale consideration under capital gain chapter, but interest on that compensation is income from other source. It will not go to income from capital gain. Okay, mind this. And it will be taxable in the year in which you are receiving it, and 50% is anyway allowed, that we will see in the subsequent sections. Advance forfeited, this section also we talked about. If you are taking any advance for sale of a capital asset on or after 1st April 2014, that will be treated as income from other source. But if you are taken any advance prior to 1st April 2014 and you have forfeited it earlier than 1st April 2014, it used to be reduced from the cost of acquisition. But post that, I mean now, even now also, if you take any advance for selling of your building and you forfeit that, that should be taxable under income from other source. So just remember the date, that's it, nothing else. 1st April 2014. इससे पहले that will be going down as a cost of that will be reduced from cost of acquisition. After this date, it will be taxable under income from other source. Any sum of money or value of property received without consideration or for inadequate consideration subject to be subjected to tax in the hands of the recipient, section 56 to 10. So this is absolutely important, guys, and you might be already aware. This section you should not leave and go to the examination. You have to be like section, subsection, clause also should be on your fingertips. Remaining tomorrow class ఉంటుంది అంటే ఇప్పుడు వెళ్ళిపోతున్నావా? Okay, your wish. So my point is, this section 56 to 10, this section has to be on your fingertip. In examination, please quote this section because every time you get a question on this. So if you are receiving any sum or value of any immobile property for without consideration or for consideration lesser than their original value or inadequate consideration, we call it, that will be taxable in to the recipient. Assuming that you are not related to me, you are giving me a house property, I mean you are selling a house property for, you are selling me a house property for 80 lakhs, but the stamp duty value is 1 crore. So why are you selling me at a lesser price? Because maybe there is a black money flowing from my side to your side. So that is the reason why they are saying, if the sale consideration is lesser than the stamp duty value or inadequate consideration, that 20 lakh, whatever the discount that you are given, that will be income from other source in the recipient for me. Okay. If you give free also same way, it will be taxable under income from other source for me as a recipient. Okay. So when you say something as a inadequate consideration is the difference should be more than 50,000. So if the fair market value is 10 lakh and you are selling it for 9 lakh 70,000, so 30,000 small difference, right? That's fine, they will leave it. If it is a sum of money, property also 50,000 and 10% of the consideration. This I will explain with the numbers only, as someone was talking about few things, so it's difficult to understand, but with the numbers you will get it. So there are two types of things that you might get it. One is money, another is immovable property. If it is a money and if someone is gifting you, or like without consideration obviously, if they are giving it to you, if it is exceeding 50,000, it will be taxable to the recipient. There are certain exceptions, we will see that exceptions also. But if they are giving you some immovable property and if it is for free, again it is taxable for you. If it is for consideration, but that is the inadequate consideration, lesser than the market value, and the difference is more than 50,000 or more than 10%, whichever is higher, the difference that you will be paying tax under income from other source. So this is a summarized table. If anybody is having any questions, just let me know. I think we have very less participation today. I'm not sure if I'm going really fast, because as I said that I want to complete 3 chapters. If you are receiving any money, if it exceeds 50,000, it is recipient has to pay tax. If it is immovable property, 50,000, like the difference is, for movable property we don't use the word stamp duty value, we use the word fair market value. For immovable property you use the word stamp duty value, because stamp duty value is only for immovable properties, right? And the difference between stamp duty consideration and the stamp duty value is higher of 50,000 or 10% of the consideration, then that will be income from other source for you. So non-applicability of section 56 to 10. So there are exceptions, which means that even though you receive something for without consideration or for inadequate consideration, you will not be paying tax. This is where people make mistakes. This is where in examination you might make a mistake. So I'm just saying that this is where you have to pay more attention. That 50,000 wala tha you might have understood by now only, but this is somewhere that pay more attention. So if you are receiving that money from a relative, it is not taxable. I mean, like, you need not pay. So if my brother is giving to me, or me, I am giving it to my brother, or my father is giving it to me, like if it is coming from a relative, that is, if it is coming from a relative, even though the amount is exceeding 50,000, it is not taxable. On the occasion of the marriage of the individual, okay, so whenever you get married, make sure that you receive a lot of gifts from your friends and everyone, because that time there won't be any taxation. I mean, like, even if they gift you more than 50,000 also, it is not taxable for you. So on the occasion from relatives, and on the occasion of the marriage, and under a will or by way of inheritance, like a person is receiving it from their father, I mean, like as a inheritance property, again it is not taxable. In contemplation of a death of a payer or donor, as a case may be, which means that someone at the time of death is giving it to someone else as a will. You might have heard this will bolo to, they are writing a will so that their property passes on to someone else. So if you people don't die multiple times, right, just to save tax, it's only once. So like that, when you are writing a will or on a contemplation of death, like about to die, and someone is writing it, it is not a taxable for them. From local authority, sometimes you get the money from local authority. So why are you getting wealth? Sometimes you win a prize. I mean, you might have heard this whenever our celebrities or sports stars win any medals, gold medal or anything like that in Olympics. State governments and all these governments keep on giving money, right? So it is not taxable for them. Any fund from these institutions, section 1023 say, like charitable institutions, if you are receiving anything, even though if it is more than 50,000 also, it is not taxable. Again, fund, the same logic it goes here. From individual or a trust created and established solely for the benefit of relatives of the individual, from such a class of persons are subjected to such conditions as may be prescribed. Okay, so there was some amendment here. Whenever they say that such persons during the COVID time, lot of people have given the money to the people who are undergoing the treatment. So government is like, okay, that time some people might have given 1 lakh or 2 lakh also because of the treatment. So that time once they are suffering because of that disease, and some people are suffering because someone might have lost their family members. That time asking them to pay tax is not a correct thing. बोल के there was an amendment. So that amendment I'll read it once. Okay, I not mentioned here, but I'm reading it somewhere. I mentioned it. Okay. So during the COVID time, if you are okay, here I mentioned. During the COVID time, someone receives, they have to mention, they have to keep all the documents, they have to get, produce a certificate. You have to produce a certificate also. Okay. ఎవరి దగ్గరైనా మనీ ఎక్స్ట్రాగా ఉంటే అవి మనకి ఊరికే ఇస్తే పడుతుంది. ఇఫ్ సమ్వన్ ఈస్ గివింగ్ యూ మనీ అండ్ ద అమౌంట్ ఈస్ మోర్ దెన్ 50,000, యూ హ్యావ్ టు పే ట్యాక్స్. ఓకే, యూ హ్యావ్ టు షో ఇట్ యాజ్ ఇన్కమ్ ఫ్రమ్ అదర్ సోర్స్. యా, so there are few questions. I know you get bored if I don't solve questions, so I am taking few questions here and I'll wait for your answers for every one bit, and I request everyone to be participative, keep writing, keep chatting, keep interacting, then you will understand where you are making mistakes, where you are going correctly. Mr. A dealer in shades receives the following without consideration during the year. So he is receiving without consideration बोल रहा. So one के लिए just whenever you are giving an answer, no, one you give your answer. Cash gift of 75,000 on his anniversary 15th April. So in comment box just write one taxable or non-taxable. That's it. I am not going to give answer. You have to try. Bullion, the fair market value of which is 60,000 on his birthday. So this is also just tell me two taxable or not taxable. Plot of land at Faridabad on this date. The stamp duty value is 5 lakhs on that date. B purchased the land on some date. Okay, so now 3 also just put answer. See that is encouraging for me also, guys. Like I feel happy that you're understanding, no. And Mr. A purchased from his friend Mr. C, who is also a dealer of shares, 1000 shares of this X Limited at 400 each on this date. The fair market value of which was 600 on that date. Mr. A sold the shares in the course of the business on this date. So dates I am not reading because I am a bit lazy. You tell me for this also. Shares के लिए you just tell me the answer. I'll see whoever has answered. Kirtana 1 2 taxable. Third, what about third? What about this? So I'll give you the answer. This is not coming under income from other source because it will come under PGBP for him. To be very specific, it is taxable only if it is a capital asset. It's a stock and trade for him, so there is no tax point here. Next. Further, on this date, Mr. A took possession of property building booked by him 2 years back for 20 lakh. The stamp duty value of the property on 1st November 2022, that time 32 lakhs, and on that date of booking was 23 lakh. He had paid 1 lakh by account pay check as down payment on the date of booking. On 1st March 2023, he sold the plot of land at Faridabad for 7 lakhs. So this is a kind of a mixture of your capital gain as well as income from other source. I'll wait for a minute. You apply all the provisions, okay? Section 43 CA, section 50 C, as well as 56 to 10. These three combination it is coming, and I really like this because you are kind of applying multiple provisions for one head. I'll wait for 30 seconds. I hope it is visible. I'll just see how visible it is. See, third one you tell, I mean this one, this land wala, Faridabad, what is it? What I will do is, first November में he bought it. Two years back for 20 lakh. So 2 years back, we are coming backwards. 2 years back, it was 20 lakh. Stamp duty value of the property on 1st November is 32 lakh. On the date of booking is 20 lakh. So now the question is, do you consider this value or this value, because you paid 1 lakh by account to pay check. 43 CA. No, my question is, what is the income from other source? That's it. Amount, just tell me the amounts. I mean, examiner is more focused upon the last column. Last column, whatever the 3 answers that you gave is absolutely right. All of the people who have answered, their answers are right. Explanation is up to your talent, up to your grammar, English and everything. You write it as much as you can. But the number wise, absolutely spot on it should be. Okay. Now, income from other source, what is the amount that he should be paying tax on? Because there are 3 amounts. Okay, he is purchasing it for 20 lakh. When he booked, stamp duty value was 23 lakhs. But now when he is taking the possession, it is 32 lakh. You remember, whenever there is a difference between the actual consideration and the stamp duty value, the difference you should be offering it under income from other source. That is a provision. But the second point is, which stamp duty value? Stamp duty value as on when you book the building, or stamp duty value on the date when you are taking the possession. Kirtana, your answer is very near but not correct. Just try to see where you are making wrong. And Jacob, you paid 20 lakh. Question is not how much you paid. The question is how much is taxable. So if someone is coming to you for tax advice or tax return, you ask him to pay 20 lakhs tax because he already paid 20 lakhs to the builder. How much tax you will ask him to pay? I mean, legally. Will not go with anything other than that. The answer is 3 lakh. Because at the time of booking, the stamp duty value was 23 lakh. Now the stamp duty value is 32 lakhs. Should I take the stamp duty value on that day, date of booking, or today? Boleto, if you had paid part of the consideration through other than cash on that date, you will take the stamp duty value on the date of booking only. So that is the reason why 23 lakhs was the stamp duty value and you paid 20 lakhs as a consideration. That 3 lakh, the difference, that is called inadequate consideration. 3 lakhs will be taxable now. Anybody, any questions with respect to this? Very quickly. Guys, any questions? Can I move to the next one? If you have any questions, this is the right time to ask. There are how many people? 10 people. Yes. I will write it here one more time, Jacob. This is a booking I have done 2 years back. Today I am taking the possession. Stamp duty value, that time it was 23 lakh. Now the stamp duty value is 32 lakh. one by one we will divide and rule it. First thing is, should you take the stamp duty value of this or this? First of all, why do you need a stamp duty value? Because that's what your section 56(2)(10) is saying, right? Whenever you are taking any immovable property for a consideration, like without consideration or for a consideration which is less than the stamp duty value, yes, the stamp duty value, there are two stamp duty values. Which one to take? The answer is, had you paid any consideration by other than cash on the date of booking? Yes, in the question they said 1 lakh, yeah, paid it. So that 1 lakh, because they paid it otherwise than by cash, like account pay check drawn on a bank, I should not say otherwise than by cash, account pay check drawn on a bank or a demand draft or any other specified modes. Yeah, so I will consider 23 lakhs as the stamp duty value, and the actual consideration he is paying is 20 lakh. So the difference between the stamp duty value on the date of possession, because you paid 1 lakh by account pay check, and 20 lakh as actual consideration, the difference of these two is your income from other source. Now let me know if you have any question. What about the plot of land in Faridabad? This is a Faridabad land only, right? Okay, here. So this land is selling it here. The same land, whatever he got it. Yeah. So here 5 lakhs was the income from other source. 5 lakhs was the income from other source, right? Now he is selling it for how much? He is selling it for 7 lakhs. So whatever the cost, see now what is your cost of acquisition, because you got it for free, right? So whatever the cost, whatever the valuation you have adopted for 56(2)(10), that will become your cost of acquisition, which means for 5 lakhs you have asked him to pay tax. So that 5 lakhs will become cost of acquisition for your capital gain. The difference of 5 lakhs and 7 lakhs, 2 lakhs, and it is short term because it is held for less than 24 months. You will be paying capital gain tax of on this 2 lakhs. Yeah, 2 lakhs. Any question? I'll wait for a minute, guys. These are the real wonderful questions. I really enjoy solving questions, to be honest, more than provisions. But we need to maintain a balance between these two also, right? Anyone, any question? Only one person saying it's fine. Can I go to the next one? Yeah. So next one, again same, it's like a very good homework for you, but we are doing it from home. Yeah. Discuss the taxability or otherwise of the following in the hands of the recipient under this section. Akhil HUF received 75,000 in cash from the niece of Akhil, that is the daughter of Akhil's sister. Akhil is a karta of the HUF. So this provision I did not tell you, but this is the same as that. From any family members, like HUF is also receiving something. So you just put 1 and your answer. Nitisha, a member of her father's HUF, transferred a house property to the HUF without consideration. The stamp duty value is 9 lakh. Okay. Then Mr. Akash received 100 shares of this from his friend as a gift on the occasion of his 25th marriage anniversary. Marriage anniversary is not marriage, okay? Marriage anniversary is just a celebration of your marriage, but not a marriage. So you accordingly you give answer. Fair market value was 100 per share. He also received jewelry worth of 45,000 from his nephew on the same day. Kishan HUF gifted a car to his son of Karta for achieving good marks in 12th board examination. Fair market value of the car is 5,25,000. So now assuming this is your examination, 4 marks ke liye these 4 will be given. So one mark ke liye one question ke liye one mark. So I will wait. 1 is tax, 3 is tax, 2 also you try. See, when I ask participation, why people hesitate, I don't understand. One, yes or no. 1 you are saying taxable, okay. 2 you are saying taxable. What is 2? See, father's member of a father's HUF. So is it not a relative? HUF बोले तो big family, a karta will be there, all the family members will be there na. So when family member is giving to HUF, it's received from relative only, so it is not taxable. Third one, taxable. Akash received 100 sheets of his friend. Okay, 100. He also received. Okay, you tell the amounts. This is 10,000. This is 45,000. So should you club both? Should you club both or separately? Take it like a challenge, guys. Nothing. I mean, you're not losing anything by making wrong answer. See, third one, I want amount. Because he's receiving jewelry of 45,000. Our threshold limit is 50,000. And shares is 10,000. I mean, like 100 into 100, 10,000. So should you club both or should you see separately and say that, okay, it's not taxable. I'm not giving separately. So if it is separately, it's not taxable, Kirtana. Is it? If you are treating them separately, which means both are below 50,000 only, right? It should not be taxable, if that is a justification. And third one, fourth one, car. Car, is it a car? Is car a asset? Car is not included in the definition of an asset. So whoever has given answers, nothing good, nothing bad. Just correct your understanding. I remember in CA final also there was one question like this. They have given 4 bits. One of the bits they given this only. So lot of people thought that a car is also asset, so it is taxable. But car is not a capital asset, so it is not taxable. Okay. And coming to this, as you people said, shares 10,000 without consideration you are receiving, and jewelry 45,000. Both needs to be added. I mean, this is all one bracket. So both put together it is 55,000, and because it is more than 50,000, it is taxable. It is not a threshold. Everything is taxable. And coming to this HUF wala, HUF like member is giving to HUF is like a family receiving it from a relative only. So it is not taxable. Taxable, non-taxable, taxable, non-taxable. Yes, answers also same. Any questions, anyone so far till here, just let me know. Examination mein unnecessary you are missing 4 to 5 marks just by not paying focus on these things. Every time we keep studying PGBP salary only, but just come out of it. There is a good chance of getting good marks in TDS, TCS, assessment procedures, clubbing, other sorts. Like give importance to all the chapters. Don't just get stuck under PGBP or capital gain or salary. Okay, I am going to the next one because nobody is answering anything. This question also I am doing. See, who are the people who said that, sir, we want illustrations? When I am solving illustrations, you are not answering it. This is saddening. Yeah. Mr. Hari, a property dealer, and these questions are really good questions. These are all CA final questions, okay? CA final and all previous year questions. So when we are solving such kind of questions, now all the concepts will be tested. If you are like final student, it's well and good. If you are inter students, you think that your preparation is going on a top notch. Okay, everything will be tested. Mr. Hari, a property dealer, sold building in the course of his business to his friend Mr. Rajesh, who is a dealer in the automotive spare parts. So for him, it's a stock in trade. The seller ke liye, it's a stock in trade. Recipient ke liye, it's a capital asset. For 90 lakh on this date, when the stamp duty value is 150 lakh, the agreement was however entered into on this date when the stamp duty value was 1,40,000. Mr. Hari had received a down payment of 15 lakh by crossed check. Remember I said it should be account to pay check drawn on a bank. Crossed check is not permissible. So I am giving you a little of answer. Lot of provisions are there, right? So I am trying to make a little easier. From Rajesh on that date, discuss the tax treatment implication in the hands of Mr. Hari and Mr. Rajesh, assuming that he has purchased the building for 75 lakh. So now this is a question. I would wait for your answer 9:47, right? Till 9:50 I will wait, and I want genuine answers from your end. From Hari, for him it is a stock in trade. Cost of acquisition, he purchased it for 75 lakh. And sale is selling it for 90 lakh. So is there any provision to catch him for stock in trade? Now for Hari, this is Hari, right? And Rajesh, Rajesh, for him it is a capital asset. Capital asset. On the date of agreement, stamp duty value was 1,40,000. $1,40,000. Here it is 1,50,000 on the date of sale. This is agreement, this is sale. And now from Hari's point of view, you tell me, this is like a really good question, guys. I know the more I ask questions, less people will be on live. So if that is the case, we cannot complete 3 chapters today. It's okay. In the hands of Hari, which section will apply? I'll give you a hint also. 43 CA. Go back to your capital gain PGBP chapter and see what is the capital chapter that's saying. When the consideration is lesser than your stamp duty value by 10%, then there is some provision. You tell me what is that provision. What is 43 CA? Now first we'll break it like a divide and rule policy. Should you take stamp duty value of agreement? Should you take stamp duty value on sales? The answer is on the sale only. The reason, he has not given by account to pay check. So I've kind of sorted one issue. Next issue, for PGBP में for Hari, for PGBP के लिए cost is 75. So what is his profit here? Is it 90 lakhs minus 75 lakhs or 150 lakhs minus? Okay, did I write the answer wrong? Once again. Okay, correct only. Yeah. Profit, should it be 90 minus 75 or should it be 150 minus 75? As per 43 CA, it is actual consideration minus value assessed or assessable as per any other law for the timing in force, which means that on that date the stamp duty value was 150 lakh. You are selling it for 90 lakh. So I will be considering whichever is higher. What is higher? Yeah, what is higher? 150 is higher. So 150 minus his cost of acquisition is 75 lakhs. So 75 lakhs he will be paying it as a business income. So now one side of the story is done. Second side of the story, Rajesh, for him it is a capital asset. So once it is a capital asset, 56 to 10 will be applicable. 56 to 10 will be applicable. And one more thing, when he is purchasing it at sale is 90 lakh, stamp duty value is 150 lakh. So is there any 56 to 10 provision applicable here? And if so, what is the amount? He bought it for 90 lakh, stamp duty value was 150 lakh, right? So 60 lakhs he will be paying it under 56 to 10. Any question, guys? I mean, these are not like chutke questions and simple questions. It requires some kind of an understanding. Whoever is there online, let me check how many are there. Any question here? Any questions, anyone? (43 CA) will applicable only if it is your capital asset. See, if I am the real estate agent, I am having or real estate developer or some sort, I'm having land as my stock in trade. So when I'm selling my stock in trade at a price lesser than the stamp duty value should be considered as my sale consideration. That is your 43 CA. But if the land, if I'm holding it as my capital asset, which means that now I'm into a manufacturing sector, I'm having land. If I'm selling that land for a consideration lesser than the stamp duty value, then 43 CA will not apply. 50C will apply. Understand the difference. See, we are just challenging with the sections. You might say, sir, why we are dealing with so many sections? It is important. It is, see, actually 50C was the section which came earlier. But people, whoever is doing this real estate, no, they were deliberately trying to sell it at a lower price, saying that boss, it's my stock in trade, I'll sell it whatever the price that is I feel is correct thing. So that's how that was a loophole for some companies to make money. Okay. So then they stopped that loophole and they plugged in the loophole by introducing this section 53 CA by saying that even though it is your stock in trade and if you are selling it for a lesser than your stamp duty value will be considered as a full value of consideration, and rest of the remaining calculation you do it as much you can. And one more thing, for him there is no stock of there is no indexation benefit, because for stock in trade item like for inventory there is no question of indexation. Indexation is only for capital asset. Okay, only one person saying it's clear. So should I understand it is really clear, or is it that nobody is there to answer? Okay guys, I will move. Compensation or any other payment received in connection with the termination of his employment will be considered under income from other source. I'll explain this logic and listen carefully. You are just qualified now. So now you are qualified, BCA or CMA, whatever. You are trying to join a company. When you join a company, they will be giving you an offer letter. When you receive the offer letter, you work for that company, they will pay you salary. The salary will be taxable under your income from salary. No question. This is very clear, sir. We know why are you telling this. Flip side of it, Accenture or TCS and remaining there's Infosys, yeah, especially. So this was a case happening last year. What has happened, because you qualified, assuming that there are 1,000 people qualified, assumption, usme se 100 people they have hired it. Infosys hired 100 chartered accountants or CMAs or CS. Okay, so you are thinking that okay, my salary will be 15 lakh or 20 lakh or whatever that range. You are happy, but because of recession, they are saying, boss, we cannot have 100 people on board. We will only have 40 people on board. 60 people ke liye we will terminate your contract. You are like, what is this? I have not even joined. Why are you terminating me? So they are like, okay, sorry for disturbance. Sorry for your disturbance. Because we already committed to we will pay you 5 lakh rupees as a compensation for each candidate. So that money what you are receiving, this is not because of employer-employee relationship. This is because of termination of a contract that was expired or terminated even before it came into force. So there is no employer-employee relationship, right? So that amount you will be paying tax under income from other source. So I hope it is clear. I mean, just don't go with the numbers only, just understand the context of it, okay? So whenever there is a compensation or anything, termination of some sort you are receiving from your employer or future employer, that all will come under income from other source only. And assuming that if I'm a company, I'm paying to someone, and if they are on board, what do you call on board? I'm taking them on payroll, then employer-employee relationship is established. I'll be registering them under PF Act and everything, right? So whatever I pay to them will be salary. But assuming that someone I'm hiring for only 3 months, not on a full-time basis, maybe it's on a contract basis. So you might say, sir, for them it is PGBP, might not be. Maybe he is not a business person, it's just like doing some freelance. So he can show this income under income from other source. I hope this is also clear. So this is a elaborated discussion, guys. I'm not skipping just by saying this will come here, this will come there. If you really try to understand the concept now, you will enjoy taxation like anything. Taxation and GST and customs, these 3 are like really lively topics. However, the following interest income accruing to a certain persons would be exempt under section 1015, and you might have seen that for post office के लिए whenever you contribute or deposit, no, that will be taxable under income or other source. You know that. But there is an exemption of 3,500 if it is an individual account, 7,000 it is a joint account. I would say this is also important from examination point of view. The reason is that in final assessment problem, deliberately they will give that somebody has invested in a post office and they got 8,000 rupees as the interest. Then you have to say that is yes boss, that is taxable under income from other source. At the same time, there is a deduction of 3,500. Just remember this number, that's fine. And key man insurance policy also, I explained it multiple times, again I am repeating it. If a key man insurance policy is expiring or maturing in the hands of the company, it's a PGBP income. If it is maturing in the hands of the employee, it is salary income. If it is maturing in the hands of any other person other than these two, which means that the family members or legal heads, someone like that, they will be paying tax under income from other source. It is not exempt. 1010DD in that section is there, no? That section you will not use here. I think yesterday's session also I explained this. 1010DD will not be applicable for key man insurance policy. And residual income, you know that if any income is not taxable under any particular head, it will come here, just like a MPA MLA example, because there is no employer-employee relationship. Whatever you pay to them, that will come under income from other source only. And rent also I gave example, that's fine. So now we'll go to section 57. Any questions so far, guys? I'll just take a small break. It's 1.5 hours, bolto. I think we today will complete 2 topics, not 3 topics. Okay. Anyone, any questions so far with respect to section 56? No one. Okay. So just as I said earlier, just to recap of things so that like mind map should be clear, like whatever. Sometimes it so happens that when you read so many sections, no, you will forget where you are also. You will forget sometimes you are human also. I mean, you brother, I am also. So that's why we should not lose a track of where we are. Salary head में 15 charging, 16 deduction. House property 24, 30, 37 for your PGBP. And for capital gain 54, like same way income from other source के लिए 57 is your deduction. So every head has its own chargeability, every head has its own deduction, every head has its own inadmissible expenditure also. Sir, what is that inadmissible expenditure? PGBP you might have read it, no? PGBP we have studied, no? If you pay any amount on which TDS is deductible but you are not deducted, or deducted but not paid in cash, or you are not paid something in by the time you are filing the return of income. You remember 43 May, 40A, 40A2, 40A3, 40A1A, 40A and all these things. Same way you will have in section 57 also. Yeah, I'll repeat. Deductions allow, 57 is all deduction allowable, 58 disallowed. So now we'll come to only 57. 57 mein what is allowed in case of dividend or any income in respect of units of a mutual fund or specified under this section. Interest expenses expenditure to earn such income is allowable as a deduction subjected to maximum of 20% of such income included in the total income without deduction under this section. What I mean by that? See, for every head you are saying something is taxable, something is deductible, right? So for earning some dividend income from these mutual funds or units, I have to incur some expenditure also, right? Maybe I had to appoint someone to collect the money, or maybe I have to incur some brokerage, maybe I have to incur some software related expenditure. Practically people say that I am incurring for software also. So the reason, the point here I am trying to make is, if you earn 100 rupees, no, 20 rupees you can show it as an expenditure. Come again, for income from other source chapter mein, if you are earning any dividend or income in respect of mutual funds, 20% you can show it as an expenditure. Few people don't know this provision. You can show it 20% as an expenditure. Okay, maybe software expenditure, maybe some brokerage or something, commission or something, consultation, whatever you show it, 20% you can show it. Okay, remember for examination, in examination they might say that you are received the dividend income from some this fund, so now you have to take that income into your income from other source. Along with that you deduct 20% there itself in the inner column itself, so that outer column you will take only 80%. In case of interest on securities, any reasonable expenditure. So for mutual funds के लिए and for this units के लिए, what they said is only 20% cap they have put in, but for in case of interest on other securities, it's not given because you might have to incur some other expenditure also. This is all fund, right? Fund में you will not have more expenditure. Cost of acquisition is nahi. I'm not saying that is your expenditure. Expenditure बोले तो like brokerage, internet, software, like that. So there is no expenditure, no limit for here, but it should be reasonable. Okay, you cannot say that 100 rupees earning ke liye I have put 1000 rupees for that, something like that. GST classes will see so much what is the response from students and all, because one thing you might have to understand, not just you, I mean whoever watches, without much support, no, we don't feel like actually taking a class. Okay, so I'll see how many of people are like really waiting for GST, because I have a lot of GST videos in our channel only. For last attempt also, I made all the videos, and few amendments are there, of course I understand, but most of the topics I have covered in and posted in our channel only. If people are like kind of really want GST, then I'll be taking the GST also, otherwise I will be skipping for this attempt. Yeah. Next, these things are fine. Where income to be charged under this head is from letting on hire of machinery, plant on furniture with or without building. So what does this mean is that see, letting out on a rental basis to someone is, if it is your business, it will be your PGBP income. Expenditure also you will claim there only. But assuming that it is not your business income, main income, so all that income will come under income from other source, right? To earn that income, whatever the expenditure that you incur, no, that will be deducted, like current year expenditure. You remember PGBP also we have the section 30, like that. If it is your PGBP income, you claim it there. If it is not a PGBP income will come under income from other source, and all the same expenditure you will claim here also. Current repair, any premium for insurance you are taking, or depreciation that you are allowing. So depreciation also you will claim it here. If it is income from other source, many people don't understand this. They think that the depreciation you will claim only for your PGBP. Okay, if that income is coming in section 28 like PGBP chapter mein, you will claim it in section 32. But if it is not your PGBP income, you will show it under the section 57. In case of income in the nature of family pension, so family pension again, like family members are taking any pension, no, that pension will be taxable under income from other source, that you know it. But there is a deduction, right? The deduction is 15,000 or 1/3 of the pension, whichever is less will be allowed. Okay, so if you are kind of receiving 1.5 lakh as a pension, so that is your income from other source. So 1/3 bole to 50,000 or 15,000, whichever is less. So 15,000 you will claim it under as a general deduction, and the remaining is you offer it to the tax. And if someone receives a pension from armed members and all those people, no, that is exempt only. And someone who is having this Veer Chakra, Veer Chakra, so they are also exempt. I mean, like army persons, for them the government has given its exemption. So there are few questions, but I am not going to solve it. I just want to tell this a provision and then we will leave it. In case of income by way of interest on compensation or enhanced compensation received chargeable under the head. So compensation, enhanced compensation, I told multiple times, when the compensation is given, no, that is taxable in the year in which it is received. You remember that capital gain chapter mein. But if you are receiving interest on that, no, that is again taxable in the year of receipt, but not under income from capital gain, but income from other source. So when you are offering that, usme 50%, whatever you receive, 50% as a deduction. So you might say that why we are offering as a deduction bole to, see, whenever you are asking government to pay some interest or something, you might have to reach out to a lot of offices, lot of government officials. You might have to give so much of bribe also, we don't know. So 50% you might have to spend a lot of time. 50% is allowed as a deduction. You remember pension ke liye 1/3 or 15,000 whichever is lower, and for interest on compensation or enhanced compensation also other source may 50% flat it will be deducted. And section 58 is deductions not allowable. So what do you mean by the deductions which are not allowable? You remember section 40A in PGBB, same provision is, it's applicable here. Same expenditure whatever it was not admissible in PGBB, same expenditure if you are incurring for income from other source incomes, it will be disallowed. Okay, like any personal expenditure or anything that you have paid outside India on which you are not paid tax. You remember that section 40A1, if on which tax has to be deducted and you are making a payment to a non-resident without deduction of tax, or after deduction of tax not paying to government, 100% is disallowed. Same way here also it is 100% disallowed. Okay, and any expenditure in respect of which payment is made to a related party in excess in cash in excess of 10,000, again this provision, related party transaction you should not pay, but if you pay anything in cash and that is more than 10,000 it is disallowed. 30% disallowed, you remember section 40A1A. Say I am trying to correlate, whoever is watching you will understand. PGBB 40A1A is also saying if you are paying any amount or any interest to or anything which is chargeable under chapter 17B to resident on which you are not deducted tax, or you deducted tax TDS but not paid to the government within the time prescribed under section 139(1). You remember that? Same thing for income from other source income also, you might have incur some expenditure. Okay, that expenditure on which tax is deductible but you are not deducted tax. Okay, so if you are not deducted tax on that, then 30% is disallowed. Okay, same like 40A1, 40A1A, here also same logics. Again for 194B, 194BB, you remember, no? For that if you are incurring any expenditure, this is not allowed. If you win any lottery ticket, that will be taxable as 30% flat, but that cost of the ticket also not eligible for, like you have spent 10 rupees and you won 1 crore. So government will ask you to pay 30% on 1 crore only. 1 crore minus 10 rupees. That cost of the ticket also not allowed to be deducted. Flat amount, receipt amount mein 30%. Deemed income 59. You remember section 41 in our PGBB. I am trying to make you realize everything. 41, there also we said that if any expenditure is allowed in the previous year on which you are receiving any concession or any waive off or any amount on respect of which you are already allowed any expenditure in the previous year, so that will be your deemed income. Same provisions here also. Any trading, see last year you bought some goods, okay, so that you debited already but you did not pay, but that's fine, right? But today you bought it for 10,000, now there is a waiver of 2,000, so that 2,000 you have to reverse it. That is under section 49, which is same as section 41. So that is your income from other source, guys. Any questions, anyone? We have again clubbing as well as set off and carry forward. Who are all interested for this chapter, guys? If nobody is interested, we will stop it here. I mean at 10 o'clock you are closing the live session. I am not sure where you people are going or where I am going also. Would you like me to continue clubbing provisions, or fine, we can close it for the day? Anyone who are interested to listen to these 2 chapters, clubbing, or is it fine if I can close it now?